Good day, ladies and gentlemen, and welcome to the Q1 FY23 earnings conference call of Titagarh Wagons Limited, hosted by ICICI Securities. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Ms. Ashna from ICICI Securities. Thank you, and over to you, Ms. Ashna.
Thank you, Michelle, and good day, everyone. On behalf of ICICI Securities, I would like to welcome you all for the Q1 FY23 earnings conference call of Titagarh Wagons. The management today is being represented by Mr. Umesh Chaudhary, Vice Chairman and Managing Director, Mr. Anil Agarwal, Director Finance, and Mr. Saurabh Singhania, Group Financial Controller. We will start the call with the opening remarks on the results and the outlook by the management. Post that, we will have the Q&A session. I would now like to hand over the call to Mr. Chaudhary for his opening remarks. Thank you, and over to you, sir.
Thank you very much. A very good afternoon to everybody, and thank you for joining in the Q1 FY23 results conference call. The quarter has been pretty much in line with what we had expected. There have been, the company bagged its single ever largest contract from the Indian Railway during the quarter, which is in fact the largest wagon contract placed by the Indian Railway for 24,177 wagons. I'm happy to inform that we have already started execution against that contract, and the contract has to be executed over 39 months from May 2022 when we received the contract, and we are well on our way to ramp up production in being able to achieve this target. In terms of the results, presentation has already been circulated, but just to give the highlights, we did on a standalone basis a revenue of about 437 crores, which is about 27% higher on a quarter-to-quarter basis. In terms of EBITDA, we did a EBITDA of 48.8 crores, which is at 11% EBITDA margin. As I have maintained in the past that our company targets to keep an EBITDA of between 8 to 10%. So on quarterly basis there can be fluctuation, but on a blended basis going forward, we expect to continue to be able to maintain 8 to 10% EBITDA margin, but drive the revenue further towards growth. In the other segment, which is the passenger rolling stock or the transit and the propulsion segment, the company has started executing the contract for Pune Metro and is continuously supplying trains to Pune Metro, which has been put into passenger service. An important milestone was reached by the company when we signed a contract with CRRC, which is the Chinese Railway Rolling Stock Corporation, and Bangalore Metro. The genesis of the contract is Bangalore Metro had placed a contract on CRRC to supply 200 odd coaches, but because of China, CRRC not able to fulfill the Make in India condition, the contract was not moving forward. We were able to step in and sign a tripartite contract to produce these coaches entirely in our plant in Titagarh. The advantage, apart from a contract, acquiring a contract, the advantage that we get is that this will also bring us into the stainless steel coach manufacturing arena. We will be able to get the technical expertise, know-how from CRRC, and also the credentials to be able to manufacture stainless steel coaches. And this would make us as the first and only company in the passenger rolling stock to have facilities and capabilities to produce every type of passenger coach, which is carbon steel, as we have done in the case of EMU and MEMU, aluminium, which we are doing now for the Pune, and stainless steel, which we will start with Bangalore Metro. On the third segment, which is the shipbuilding, bridges, and defense, we have already started executing the contracts for the shipbuilding, which we had acquired over the last few quarters. We successfully launched our first warship for the Indian Coast Guard in cooperation with GRSE. We were subcontracting manufacturing for GRSE for that, and it was successfully launched during the quarter. Apart from that, we also launched the first export vessel, which was for Guyana, again with GRSE being in the front. So all the three verticals have been contributing this time to our top line and bottom line. In terms of our overall order book, standalone basis, it is at about 10,000 odd crores, which is a healthy order book, and going forward, as I said, we would continue to focus on building on this order book and building on execution, ramping up execution. On the overseas subsidiary, that is Titagarh Firema, there has been a very important development or milestone that we have been able to achieve in terms of signing an agreement with the government of Italy, wherein the government of Italy would acquire a minority stake into Titagarh Firema. This is going to have a very important strategic advantage for the company to have the government on our side of the table as an equity partner in the company. Apart from that, we've been able to come out of the COVID aftermath. Of course, there have been a lot of challenges in Europe in terms of supply chain disruptions, increase in costs, unprecedented increase in costs on account of the Ukraine war. But we have been able to kind of try to address most of them, and we are still hopeful that we should be able to stay with our target of trying to achieve an EBITDA break-even this year and a net break-even in the following year. The order book in Italy stands at about 500 million euros. In terms of the legacy contracts, which we had expected to be completed within the first quarter, there is a spillover for 1 or 2 months. But within the current quarter, very small quantities are left, and within the current quarter, we will be done and dusted with the entire legacy contract, following which we will be focusing on building new trains against the newly signed contract for Rome, that is Lazio region, as well as Catania or Sicily Metro. From our side, that is the opening comments, a gist of the quarter gone by, and I'm most happy to take any questions and answer them to the best possible extent. Thank you.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone phone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Chetan Vora from Abacus Asset Manager. Please go ahead.
Yeah, good afternoon, sir. Sir, wanted to understand how many wagons would we have manufactured during the quarter?
My apologies, your voice is breaking up.
How many wagons we would have manufactured during the quarter?
During the quarter, the total number of wagons we produced was 800.
Okay, and for the passenger coaches?
We have delivered up to date about 8 trains, and now the production is being ramped up. We are targeting to reach 3 trains per month in the next 2 or 3 months.
Okay, and these 800 wagons, what we did this quarter, what was the number last quarter, June, and the preceding quarter?
I would be unable to give you the exact number. We will come back to you with the exact number, but it was about the same.
Okay. So would you mention, why there was a flattish growth, because we got the order from the railway of nearly about 8,000 wagons. So by when this should start picking up?
So the order was awarded at the end of May, 29th of May, if my memory serves me right.
Right.
And normally it takes 3 months for the execution to begin. That's how the contracts are structured. We have been able to start execution before that. So we've already, as I said, within the first quarter itself, we have started execution of the part of this contract. So we will be ramping up to reach the desired level, I would say within the next couple of months. The contracted rate of delivery is about 700 wagons a month, and we should be able to get there in the next 2 to 3 months.
So 700 wagons per month to start coming in from by the end of quarter 2. Is it fair to assume?
End of quarter 2 or beginning of quarter 3, I would say. Beginning of quarter 3 would be more likely.
Okay, sir. And sir, I was just looking at the EBIT margins of the wagon, the freight rolling stock. The margins have declined from 14% to nearly about 10% on a YOY level, despite the number of wagons being the flattish. Could you throw some light on that?
Well, I've always maintained that on a quarter-to-quarter basis, the margins can vary because of the type of wagon, the customer mix, etc. But on a blended basis, if we look at average of several quarters, and that's how we typically finalize our business strategy while bidding for contracts, and we have to strike the balance between volume and margin. So in our industry, in our segments, blended EBITDA margin of 8-10% is what is a sustainable EBITDA margin. So our request would be not to compare with one quarter or the other, but compare it with the benchmark guidance that we are providing, which is an EBITDA margin of between 8 and 10%.
But on an annualized basis, the freight rolling stock last year did 13%. Even the year before that, it did nearly about 14%. So would it be fair to assume that on an annualized basis, the EBIT margin on the freight rolling stock should be in the range of plus minus 1%?
No, on an annualized basis, as I said, the EBIT margin would be around 10%, between 8 to 10. Last year, the volume was less, and there is always the trade-off between achieving higher market share or maintaining higher margins. And in order to grow the market share, in order to grow the volumes, we would continue to target and achieve around 10% of EBITDA margin. Having said that, in case there are tailwinds to support, obviously the EBITDA margins could be better. But on a long-term basis, the guidance I would give would be about 10% of EBITDA margin.
This is the overall margin, right? You are saying?
That's right.
Overall 10% margin.
That's right.
Okay, sir. And sir, lastly, what number of wagons we are guiding out for FY23 and 24?
We are not giving any guidance in terms of the top line, but what we have shared in public domain is the quantity of order that we have received and the targeted execution schedule, which is there for the orders.
All right. And sir, lastly, on the Italian business, the legacy orders will be done, say, in a month or two. So going forward, the order what you have received in the month of January would be at what margins on a ballpark number? The 4,000 crores of order book, of that, how much is the legacy order and the balance part of the order, which is the high margin order, as you have stated in your presentation. So what would be the margin range on those, the X of legacy?
So in European territory, normally the business that the segment we operate on delivers about a 5-6% EBITDA in the European context. So in terms of the legacy contracts that are in the order book would be hardly 5%, even less than 5%. 95+% is the new contracts, which would be able to deliver us positive EBITDA margins.
All right. And what will be the debt levels at the standalone and the Concall level, the Italian business?
On the Indian on the standalone, we have long-term net debt is zero. However, there is working capital utilization of about 140 crores. This keeps on fluctuating because this is on a particular moment of time, and depending upon the cycle of the execution of the contract, typically in the beginning of the cycle of the execution, the debt level goes up, or the utilization of working capital goes up. So the debt level, I would say, in India is pretty low on a standalone basis. On overseas, we have a total debt of about 80 million euros, net debt of about 80 million euros.
Okay, sir. And lastly, sir, a final question from my end. What would be the margin profile on an annualized steady state basis for the passenger coaches? Because now we will start getting the benefit of the economies of scale also, right?
Could you just repeat the question?
On an annualized basis, what should be the margin profile on the passenger coaches in the standalone?
It would be almost similar to the freight. As we have always said that a blended basis margin guidance is what we have been providing of 8 to 10%. In the transit business, we are new entrants, so our pricing strategy is a little more aggressive. So maybe in the initial years we will have lesser margins, but that would be essential in order for us to establish ourselves as an important player in the segment. We are already market leaders in the freight wagon segment. Now we are targeting to become at least substantial players, if not market leaders in India, in the other segment as well.
Right, sir. Sir, that's it for my end. Thank you.
Thank you. Before we could take the next question, I would request the participants to use their handsets to ask a question, as the management is not able to hear them properly. The next question is from the line of Kaustav Bubna from BMSPL Capital. Please go ahead.
Yeah, hi. Is there a shortage of wheel sets in the industry, and if so, how come our company has not been affected by that materially?
Hi, good afternoon. No, we've not faced shortage of wheel sets in the recent past. The rail wheel factory has been able to ramp up production. Of course, from time to time, in case there are supply chain issues or some manufacturing issues with the rail wheel factory, the supply does get disrupted. But by and large, I would say over the last few months, the supply of wheel sets from the rail wheel factory has been normalized.
Is it true that the government has instructed that wheel sets be used for public orders over private orders?
These are policies that keep on coming from time to time, and we would not be able to comment on individual policies or directions of the government, because that is not correct for us to do so. But I can only say that the railways have given adequate time to the industry. The railways have been very transparent with their policies, and as we understand that the railways have also made a very strong supply chain plan in order to ensure that the wagons that have been projected or ordered on the industry are not stranded for want of wheel sets. So, of course, we will have to see how the story unfolds in the future. But we are pretty...
I'm sorry to interrupt, sir. Sir, I would request you to repeat the last line, as we couldn't hear you properly. Your voice was breaking.
I'm sorry. Am I better audible now?
Yes, sir. Please proceed. I would request you to repeat the last line, please.
Okay. I don't know at what stage I was not audible, but I'll just mention that we will have to see how the story unfolds going forward. But as we understand, based on our interaction with the railways, that the railways have made a very strong backup plan for ensuring that the orders that have been placed for wagons are not stranded for want of wheel sets. They have planned to increase their capacity or sourcing of wheel sets and make it available to the wagon manufacturers.
Okay, great. Just last question. What is the company's exposure for wagon orders to the private sector? Do we have an order book over there, or are we mainly catering to the public sector, like how we got this big order recently?
We have always had a healthy balance of private sector and government orders, but of course, we have to, having got these very large orders from the railways, our focus now is to stabilize our production for the wagon orders that we have signed with the Indian Railways. But definitely we do have an order book, and we are executing orders for private sector as well.
So there's no shortage of wheel sets for those private sector orders, basically, in short.
We've been able to organize wheel sets and deliver wagons as per commitments or agreements with our clients.
Great. Thank you so much. Thank you.
Thank you. The next question is from the line of Panjul Agarwal from Green Portfolio. Please go ahead.
Good afternoon, sir. I have a few questions regarding our Italian subsidiary. So first of all, what is the rationale behind equity investment of Italian government in the subsidiary, and how will it help in the Italian operations?
Sure. Good afternoon. The rationale is that we are operating in a foreign territory where most of our customers are the government entities. And if we are able to, we've been discussing with the government of Italy for quite some time, and if the government of Italy comes in as an equity partner, it definitely brings in a huge amount of strategic advantage, also positioning advantage, apart from the liquidity that gets infused by way of this equity contribution. So it is a very strong strategic move for us to get the government of Italy as an equity partner into the company.
All right, sir. And so what is our exposure in the Italian subsidiary? I need the direct as well as the indirect exposure.
Our exposure in terms of the Italian company subsidiary is the equity that we have infused. We don't have any indirect exposure in terms of guarantees, etc. So the total investment that we have made is by way of the equity investment.
All right, sir. Sir, now a few questions on the contracts. So first of all, the packing.
I'd like to correct myself. We have also given lien on one land of Bharatpur, which is our indirect exposure to the lenders of the Italian subsidiary.
Okay. All right, sir. Sir, I want an update on the projects, like the Catania project, Metro. Sir, have the supplies started?
Yes, the supplies have started. The trains have already been put into passenger service, and it has been very well received by the population and the market at large.
So what is the duration of this project? Like, when will it end?
It's a framework contract of 54 trains, and till now our company has got the execution clearance for 25 trains. Typically, the way the market works is that the execution clearance is issued in batches based on the infrastructure progress or building of the infrastructure by the client.
Okay, so how much duration is left on this contract?
It is still about 4-5 years. They have time for another 3 or 4 years to execute or to issue the execution contract for the balance trains.
Okay. And sir, we have received another contract in the Latvia region for like 280 million euros. Sir, has the delivery started for that?
Yeah, it's the Lazio region. That's the Lazio is the region of Rome. We have got this contract for 280 odd million euros, and out of this, the customer has already issued the execution for about 220 to 230, and balance 40-50 million euros is similar to what I explained on Catania. We have already started the engineering work for the trains, and we will start the physical production of the trains by end of this calendar year.
Okay. And sir, for the Bangalore Metro project, when will the delivery begin?
For which project?
So the Bangalore project, the one with the Chinese company.
Yeah, so that will start in the next financial year. In the first quarter of FY24, we will be able to start the production on. We'll start production maybe end of this financial year, but it will be substantially done in the first quarter of next year.
Oh, okay, sir. Sir, and one more question. Sir, regarding the Pune Metro project, so how many train sets have been delivered, and what is the schedule for complete delivery for all the trains?
As I just mentioned a few minutes ago, we've delivered 8 trains till now, and we are ramping up production to be able to deliver at the rate of 3 trains per month. We should be able to achieve this target over the next 2-3 months' time.
Okay, sir. So one more question. Sir, we've acquired a new shipyard, I think, which was on the south side of Howrah Bridge. So when will the commercial operation begin on that, and how will it change our shipbuilding business?
As we explained in the press release that we had issued when we acquired the shipyard, our existing shipbuilding activity is done in Titagarh, which is on the north side of Howrah Bridge. This limits the type of ships that we can directly undertake because of 2 reasons. One is the water draft, and the second is the air draft, because there are 2 bridges, the old Howrah Bridge and the new Howrah Bridge, which the ship has to sail under in order to reach the open seas. With this shipyard that we have acquired, we will be able to synergize our existing and the new shipyard, which will enable us to partially construct the ship in Titagarh, continue to partially construct the ship in Titagarh, and partially complete it in the new shipyard in Palta. It will take some time for us to be able to complete the shipyard. It will take about a year and a half or so. This was basically an infrastructure that we acquired from a bank under SARFAESI, and another 1.5 to 2 years we will continue to produce the ships in Titagarh, but after that the advantage from the shipyard will start getting available to us.
All right. Thank you, sir.
Thank you. The next question is from the line of Akshay Kothari from Envision Capital. Please go ahead.
Thanks for the opportunity. So I missed in the opening comments this Bangalore Metro project which we have received from CRRC, right?
That's right.
So I could not understand, what is the role of CRRC in this project? Could we not directly get it from Bangalore Metro?
So this was a contract that was awarded to CRRC quite some time ago. CRRC, and this was under dispute between CRRC and Bangalore Metro, because the contract entailed local production under the Make in India scheme. CRRC and Bangalore Metro and ourselves were able to finalize, and we got the approval from the Bangalore Metro to be able to produce these metro coaches in our facility on subcontracting. So CRRC is providing us with the material, and we are manufacturing the coaches as per their design. This will entail us to set up stainless steel coach manufacturing facility. The technology or the know-how for that will be provided by CRRC to us, and it will not only set up, apart from getting the business for these 200 coaches, production of these 200 coaches, This will also enable us to set up a stainless steel production line and get the know-how, expertise and credentials to produce stainless steel coaches.
Okay. And just a follow-up, when originally this project was awarded to CRRC, did we bid for it or we were not qualified to bid for it?
No, this was awarded prior to our entering into the metro manufacturing space in India. So we were not eligible to qualify and we had not bid for this.
Okay. And sir, second question is, do we have some sort of stage financing, like when we get the project, we would get around 10%, some sort of advances from our customers, and in which projects do we have them?
It depends on project to project, tender to tender. Some contracts we get an advance, some contracts we don't get an advance. I would not be able to, for competitive reasons, disclose contract-wise payment terms, but many of the railways contracts there are no advances, whereas certain other contracts there are advances. So we are able to manage our working capital with a blend of the advances that we collect and the banking facilities that the company has to its availability.
Okay. And sir, any improvement in debt which we can see going forward?
Yeah, we have already improved our debt position on a standalone basis quite substantially. From a peak debt of almost 500 crores, we were able to achieve a net zero debt level in March this year. The current debt that we have, we don't have any long-term debt, but we have primarily non-fund based facilities and cash credit facilities, which is an ongoing kind of facility and keeps on varying or fluctuating based on the execution cycle of the project.
Okay. Okay. Thanks a lot and all the best.
Thank you so much.
Thank you. The next question is from the line of Ankush Mahajan from Axis Securities. Please go ahead.
Yeah. Good afternoon, sir. So my question is related to what is our strategy to grab opportunity in Vande Bharat, and can you give us a detail of the upcoming orders in metro coaches in different cities? But majorly, what's the strategy for Vande Bharat, sir, to grab the opportunity?
Sure. As far as the Vande Bharat opportunity is concerned, it is an important opportunity. I'm happy to share that our company has already got an order for developing the propulsion for the Vande Bharat train a few months ago, and we have already started. Of course, it's going to take time. It's going to take at least a couple of years to be able to do that because it's a complete greenfield development. Having said that, for the Vande Bharat train, there are 3 tenders in the offing. There is a tender for 200 and there are 2 aluminium coach tenders for 100 each. These are very large value tenders entailing several complexities and challenges, at the same time offering a great opportunity. So we are very carefully examining the tender and will definitely take suitable steps towards what is in the best interest of the company going forward. So I would not be able to discuss or disclose more strategy because it's a tender which is ongoing and there is competition involved. But I can only say that the company is very well seized of this opportunity and is working very closely in order to take the right steps for this opportunity.
So, sir, we already have participated for this 200 crore new orders in Vande Bharat? Yeah, sorry, 200 trains.
It's not yet finalized. The tender is still not been closed. In the sense, the tender is still open, and we will definitely share with you once the tender is closed as to what the company has finally done.
Okay. And so new orders in the metro coaches from different cities?
So there are several metro projects which are ongoing. There are a couple of metro projects that the company has already paid, and we will be We'll be waiting for the results of those to come out. Apart from that, there are new tenders which have been floated and new tenders which are in the pipeline and are expected to be floated during the current financial year. On the whole, we believe that the urban mobility in India is going to continue to be a focus of the government, and thanks to the wonderful initiatives of the Honorable Prime Minister and the government, which is the Make in India and Atmanirbhar, which we truly believe are one of the most important policy decisions to support Indian industry in the independent India. We believe that this opens up great opportunities for companies like us, which are completely dedicated towards this Atmanirbhar and Make in India initiative. Incidentally, I may like to, I may be allowed to add here that ours is the only company, Indian company, which owns its own design, technology and manufacturing for producing these kind of metro trains in India.
So, sir, if we quantify Vande Bharat, that's a 50,000, 60,000 crore of opportunity, how do we see order inflow in the next 3-4 years in Vande Bharat?
To answer this would be a little speculative, and as I said, I would rather wait for the tenders to be concluded before speaking more in details about this.
Fine, sir. So, the last quarter we have a EBITDA loss in the foreign subsidiaries. So, your outlook on it?
I already mentioned a little while ago that as far as the Italian subsidiary is concerned, we are working on optimizing costs. We have taken several initiatives to optimize costs. Our target is to get the company to become EBITDA break-even or EBITDA positive in the current financial year, and to be able to target to get to net positive in the next financial year. Having said that, there are many headwinds that Europe is facing in terms of increase in energy prices, supply chain disruptions, but we are still maintaining this target, however up till it may be.
Thank you, sir. That's from my side.
Thank you. The next question is from the line of Anurag Patel from Roha Asset Managers. Please go ahead.
Thank you for the opportunity. Sir, how much equity infusion will be there from Italian government and for what state?
We have not disclosed the numbers for competitive reasons and for confidentiality reasons, as is a part of our agreement, and we are awaiting certain statutory and regulatory approvals. Once those are done and the transaction is concluded, we will definitely inform the market about the details of the transaction.
Okay. And sir, out of 80 million euro debt there, how much would be working capital related, and what will be the cost of debt there for working capital?
The cost of debt is so about I would say 40%, 35 to 40% of the debt there is working capital related, and both the term and the working capital debt is on approximate ballpark of about 3.5% per annum.
And sir, what will be the cost on the India business, cost of debt?
We are a A- positive outlook company, and we have very good credit worthiness with the bank. So we are borrowing at very competitive prices wherever required in India.
And sir, with the new contracts in Italian business, can we say the working capital will go down or it will remain at the similar levels?
You are talking of Italy?
Yes, sir. Italian business.
Italian business, of course, the current working capital that was there was also on account of the legacy contract. But going forward, I would say the working capital would remain on similar levels at higher volumes. So in terms of number of days per working capital, definitely we expect optimization. But in terms of absolute values, we expect the working capital levels to remain similar.
Okay. And just one last clarification. So this 8 to 10% EBITDA margin guidance you mentioned, is it including the other income too?
8 to 10% of EBITDA margin that I mentioned is on an overall basis. But we don't have much of other income. We do not see much of other income because most of the other income in terms of management fee, etc., has been we've cleaned up the structure. So a lot of subsidiaries have been merged into the company. So several other income heads, which used to be intercompany other income, have been eliminated by way of consolidation of the structure.
Okay, sir. That's it from my side. Thank you very much.
Thank you. The next question is from the line of Parvez Akhtar Qazi from Edelweiss Securities. Please go ahead.
Hi, good afternoon, and thanks for taking my question. So couple of questions from my side. For the stainless steel order that we will be doing for CRRC, what is the kind of capex that we will need to incur to set up the line?
Well, it's not only the stainless steel line for CRRC, but this is setting up stainless steel line of coaches for beginning with CRRC. But as I mentioned a little while ago, this will enable us to be the only manufacturer in India which has the capability, credentials, and facilities to produce all sorts of coaches, which is carbon steel, stainless steel, and aluminium. We are still working on the detailed capex, and will definitely come back to the market when we announce the exact capex number. But having said that, it is going to be a balancing additional facility. So there is not it's not likely to be entailing very large capexes for which we will have to go for new large scale borrowing or anything of that sort.
So, and what would be a broad split of our wagon order book between public sector and those from private sector?
We not disclose that for competitive reasons, but bulk of the order, because the denominator of the railway order has been very large. We've got a 8,000 crore order from the railway, so obviously the bulk of the order is from the railways. Private sector, however large it might be, can never match with the demand of the railways, which has been of a record level.
Thanks and all the best to you.
Thanks a lot.
Thank you. The next question is from the line of Ankur Agarwal from RZ Wealth Solutions Private Limited. Please go ahead.
सर ये जो बेंगलोर मेट्रो का ऑर्डर है ये कब तक कंप्लीट होने का उम्मीद?
जी बैंगलोर मेट्रो की जो कॉन्ट्रैक्ट है वो अगले साल एग्जीक्यूशन चालू होगा Q1 ऑफ नेक्स्ट फाइनेंशियल ईयर, और लगभग 2 सालों में ये 2 फाइनेंशियल ईयर्स के अंदर कंप्लीट हो जाएगा.
ये जॉब वर्क है तो इसमें भी मार्जिन वही 8 to 10% रहेंगे या इसमें कुछ ज़्यादा रहेंगे?
बिकॉज इसमें टर्नओवर कम होता है तो मार्जिन परसेंटेज वाइज इंप्रूव होता है, लेकिन अगर हम पर कोच देखते हैं तो लगभग जैसा हमें नॉर्मल कोचेज में मिलता है तो वैसा ही मिलेगा.
सर कोई टाइम फ्रेम है, ये जो इटली का डेप्ट है ये भी डेप्ट फ्री होने के लिए कंपनी पे कोई टाइम फ्रेम या कोई टाइमलाइन दिया है कि इसको भी डेप्ट फ्री होने के लिए?
ये अभी बोल पाना बहुत कठिन है, क्योंकि इटली में अभी बहुत कठिन परिस्थितियों से हम बाहर आ रहे हैं. जो 2 साल कोविड में जो लॉसेस हुए हैं और डिस्ट्रक्शन हुए हैं, प्लस जो हमने जब एक्वायर किया था तो एक जो लेगेसी कॉन्ट्रैक्ट हमें लेने पड़े थे करीब 150-200 मिलियन यूरो के, जिसमें कई कॉन्ट्रैक्ट जो हैं उसमें बहुत अधिक उसमें नेगेटिव मार्जिन्स थे. सो अब जबकि ये कॉन्ट्रैक्ट ख़त्म हो रहे हैं और नॉर्मलाइजेशन की तरफ कंपनी जा रही है और नए कॉन्ट्रैक्ट एग्जीक्यूट कर रही है, तो ज़रूर हम जो शेड्यूल ड्रॉडाउन या रिडक्शन ऑफ डेट है जो बैंकों ने स्टिपुलेट किया है, हम उसे कंप्लाई करने की पूरी कोशिश करेंगे.
सर कोई टर्नओवर गाइडेंस है अगले 2-3 साल में कंपनी 2025 तक क्या टर्नओवर अटेंड करेगी या कुछ इस टाइप का?
नहीं, हम कोई turnover guidance we are not providing, but we have given the indication of the order book that is available and the timelines of execution, which we have contracted with the government or with the customers. So we will obviously try to ramp up, do everything in our control to ramp up production in order to be able to achieve that.
सर उसमें कैपेक्स की क्या रिक्वायरमेंट होगी और अगले 2-3 साल में?
हम लोगों ने हाल ही में अनाउंस किया था कि जो लास्ट 2-3 सालों में हमने केपेक्स किया है और जो अगले 4-5 सालों में हम करने जा रहे हैं अपने हर वर्टिकल्स के अंतर्गत, यानी फ्रेट में और ट्रांजिट में और शिप बिल्डिंग में, वो लगभग 800 से 1000 करोड़ के करीब है, जिसमें काफ़ी पोर्शन हम लोगों ने ऑलरेडी स्पेंड कर दिया है, केपेक्स को इन्वेस्ट कर लिया है टू रैम्प अप आवर प्रोडक्शन कैपेसिटी फॉर बोथ मेट्रो कोचेज एंड वैगन्स. गोइंग फॉरवर्ड वी आर लुकिंग एट रैम्पिंग इट फर्दर बोथ फॉर वैगन्स एंड फॉर मेट्रो कोचेज एंड फॉर फाउंड्रीज. एंड ऑफ कोर्स जो हमने शिप यार्ड के लिए, शिप बिल्डिंग के लिए जो नया यार्ड खरीदा है, उसको बनाने के लिए कुछ केपेक्स लगेगा.
सर ये इंटरनल एक्रूल से रहेगा या बोरोइंग्स ज़्यादा रहेंगी?
अभी कंपनी जो है वो हमारी हमेशा से एक कंजर्वेटिव डेट पॉलिसी रही है, तो एग्जैक्ट ये अभी बोल पाना मुश्किल है कि इसे फाइनेंस कैसे करेंगे, लेकिन ज़्यादातर इंटरनल एक्रूल से ही करेंगे.
ओके, थैंक यू सर. थैंक यू.
Thank you. The next question is from the line of Amit Mehta from Sunidhi Securities. Please go ahead.
Yeah, good evening, sir. Thank you for the opportunity. Your presentation mentioned that you have a capacity to produce 8,400 wagons per year, correct?
That's right, sir.
And you have done the capex in last 2 years, and you will be further doing in next 2 years, and mainly increase the capacity of metro wagons and metro coaches and wagons. So, what could be what capacity, which is already done, not utilized, and which you are planning to add?
If I understood your question correctly, sir, and please excuse me if I did, but I'll answer it to what I understood. We now have a capacity to produce 8,500 wagons, 8,400 wagons, which is 700 wagons per month. And for that, all the expenditure that was already required, apart from some balancing, has already been done. Going forward, considering the growth of Indian economy and the very fact that India is on its way to become a $5 trillion economy in the future, we believe that the demand for rolling stock in the railways, which is green transportation, is going to be always healthy and strong. So we are looking at further building up capacity, both for freight wagons as well as for passenger trains and propulsion.
So what will be your the capacity after the expansion which you have planned?
We are still working out the details, but we will definitely look at the next jump, and probably would be targeting up to 1,000 wagons a month.
Okay. And you just mentioned that last 2 years capex and the next 2-3 years capex would be roughly 800 to 1,000 crore, and partly the capex is already been done. So can we assume that more than half of the capex is already been done as per your capex plan?
I would not assume anything, but the capex that has already been done is available in the balance sheet. So I would say that the overall capex that we have identified in order to let me answer it the other way around. Our planning is not based on the amount of capex, but on the capacity that we intend to achieve. So if we are able to save on that on capex and achieve the same results, we would obviously do that. So we have been very frugal in our approach, at the same time very innovative to be able to increase capacity at the minimum possible capex required. Having said that, this is an estimate that we had given that in order to achieve the targets that we have internally set for ourselves. For the amount that we have already spent, added with the amount that we intend to spend it over the next 3 to 5 years, should be around 800 to 1,000 crores.
Okay. And you have mentioned the order book is about 10,000 crore, and you have already participated in the metro projects bids and other projects also. Okay. So, and your normal timeline is 2 to 3 years, to deliver the large project. Okay. So, if I am correct, your current annual revenue is about 2,000 crore. Is that a correct amount?
Well, on a if you calculate, if you just do a simple multiplication of the current quarter's revenue, then it becomes about 1,700 crores.
Okay. So, what is a peak revenue? Knowing what is our current capacity and the capacity we are expanding. Okay. What is our capacity to do business? Is it 2,000, 2,500, 3,000 crores if we get an order?
The order that we have got, sir, and the execution that we have already mentioned, obviously entails that we should be able to enhance the current revenue. Incidentally, I must also mention that the quarterly revenue that we have achieved in this quarter is the highest ever revenue that the company has achieved in the 25-year history. And I'm sorry, I must mention here that the other very important milestone that we did achieve is that in July this year we completed 25 years of the company. So in the 25 years of the company, the highest ever revenue that we have achieved on Indian operations was in the Q1 of FY23. Going forward, in order to be able to comply with the contracted conditions with our customers, we will have to further ramp up this revenue further.
So, sir, congratulations for achieving the highest ever revenue for the current quarter. My last question: you have mentioned the overall EBITDA margin of about 8 to 10%, and you have also mentioned that your overseas subsidiary, where you have a $500 million order book, where your approximately EBITDA is about 5%. So does that mean that because of the lower EBITDA margin in the overseas contract, your domestic contract will be having a 12 or 13% plus kind of EBITDA margin, so that average comes to about 8 to 10? Is that assessment is right, sir?
No, sir. I have given the numbers on both on independent basis. The EBITDA margin for the Indian operations is what I mentioned as 8 to 10%, not a blended EBITDA between Indian and overseas operations.
Okay.
The order book of 10,000 crores that is there is for the Indian operations. Okay. And the order book of 500 million euros that is there is for the overseas operations. So we are talking about both of them independently.
Okay. Yeah. Okay. Thank you.
Thank you, sir.
Thank you. Ladies and gentlemen, a request to all the participants to limit their questions to 2 per participant. Should you have a follow-up question, please rejoin the queue. Thank you. The next question is from the line of Ravi, an individual investor. Please go ahead.
Sir, hello.
Yeah.
Hello. Yeah. Sir, only risk with Titagarh today is the Italy operation. So, do you see anything happening wrong with current Indian operation with Italy? If Italy operation is not servicing it that, or what impact it will have on Titagarh Wagons?
See, as far as the risks that we are talking about, the Italian operations, this is also, every business has its own risks, but its own opportunities. As an entrepreneur, I would see the glass half full, not half empty. So we would look at the opportunities and capitalize upon that. Having said that, the Indian operation is stable. I already mentioned about the direct, indirect exposures that India has towards the Italian subsidiary. And I don't see that the risks are very high. But having said that, I would not even venture the path to kind of say that the risks are high or the opportunities are higher. I would say that both risks and opportunities exist on the Italian venture, and we will continue to work towards encashing the opportunity and mitigating the risks to the best possible extent.
And sir, Italian government picking up stake in that business. What is the time frame?
We do not know exactly, but it should not take too much long time because these are regulatory and statutory approvals. So August is a holiday month and very little happens in Europe in the month of August. So we are working towards expediting this, the closing of this transaction and infusion of capital. But it's very difficult because there are external third parties involved, very difficult to give a precise timeline.
And sir, any new contract you have bid for Italian subsidiary?
It's an ongoing process. It's like a flowing river. So in a company, both India and Italy, we keep on participating in new opportunities. We generally only speak about the opportunities if and when they culminate into a winning contract.
And sir, you have said that Italian subsidiary will be EBITDA positive. So it will be serving that from this year?
It has already been servicing its debt, so we would continue to service its debt.
Okay, sir. Thank you.
Thank you. Ladies and gentlemen, that was the last question for today. I would now like to hand the conference over to the management for closing comments.
Thank you very much for the very detailed and insightful questions that came up. Once again, I believe that the company is in a very good position in terms of its positioning vis-a-vis the Indian growth story. It is evident that the government is extremely progressive, is growth-oriented, particularly on the infrastructure, and is encouraging and supporting Indian manufacturing. And the company has all the manufacturing verticals that the company is present in, all the business verticals that the company is present in are all offering a very good future possibility. I had mentioned 3 or 4 years ago, or even less than that, maybe 3 years ago, that our focus is going to be to achieve an order book which is close to 5,000 crores. The very fact is that because of this tailwind that the government of India is providing by way of its policies, we've been able to double that achievement. Going forward, all our business verticals are ready, they are set, and they are roaring to go. And we hope that the India growth story will continue, and we will continue to ride this wave with the India growth story. So thank you very much for your support, and I look forward to interacting with all of you when we declare the Q2 results. Thank you.
Thank you. On behalf of ICICI Securities, that concludes this conference. Thank you for joining us, and you may now disconnect.